Hey, good morning, everyone. Welcome to the SSBCI Equity Programs Overview. We are going to give it just another minute to let people come into the webinar, and we will be right back with you. All right, everyone. I think we're going to get started. Welcome to the State Small Business Credit Initiative, or SSBCI, Equity Programs Overview. At this point, I will turn the presentation over to our SSBCI Program Manager, Joanna Colson. Note that any questions you have, please put them in the Q&A box, not the chat, and we will be providing a copy of this recording and the slide deck to you on de.gov/SSBCI by noon tomorrow. And at this point, Joanna, take it away.
Thank you, Andrea. Hello, everyone. As Andrea said, my name is Joanna Colson, and I'm the SSBCI Program Manager here at the Division of Small Business. Today, we're going to be going over the two equity programs offered through SSBCI here at the Division. First of all, what is SSBCI? SSBCI stands for the State Small Business Credit Initiative. This is federal money given to the state to help small businesses, especially those that are economically and socially disadvantaged. Delaware is slated to receive $60.9 million from the U.S. Treasury over 3 rounds of funding at approximately $20 million each. We completed the first funding round in January and are currently working on obtaining the second disbursement. Please keep in mind as we go over this information that SSBCI programs are currently on hold until the second round of funding has been received. There will be an announcement made once we begin funding applications again. Today, we're going to be covering the two equity programs here in Delaware. First, the Accelerator and Seed Capital Program, or DASCP, provides direct investments into early-stage Delaware startups. Companies participate alongside a lead investor with a 1-to-1 private match, so state dollars are leveraged with private capital. The second program is the Early Stage Venture Capital Program, or DESVC. This is a new initiative that we will be launching in the second round of SSBCI funding. This is an indirect investment. Here, the state invests into Delaware-based VC funds, and those funds then invest in startups. The program is designed to expand early-stage capital and help more companies grow and succeed in Delaware. This program is not yet up and running, but we will make an announcement when we begin accepting applications. Please remember that these are investment programs and not grants. This slide is really about fit. Our equity programs are designed for businesses that are positioned to grow and scale. You should consider applying if you are Delaware-based or willing to relocate here, and you're either in an early stage or growth stage of your business. We're looking for companies with a scalable business model. That means the potential to grow revenue significantly without costs increasing at the same rate. You should also have a clear revenue model or some demonstrated traction whether that's customers, pilots, contracts, or measurable progress toward commercialization. And finally, a strong and committed leadership team matters. We invest in people as much as we invest in ideas. On the other hand, this program is not designed for personal loans, general grants, or businesses that are still in the idea phase without a defined model. You should also be prepared to provide documentation, including financial projections and ownership information as part of the review process. This slide outlines what we prioritize when evaluating investments. First and foremost is scalability. We are looking for companies that have the ability to grow significantly, expanding revenue, customers, and market reach beyond a small local footprint. We're especially interested in businesses that can scale efficiently and position Delaware as a hub for innovation and growth. Job creation is also an important consideration. We prioritize companies that have the potential to create meaningful employment opportunities within the state. That doesn't necessarily mean dozens of hires immediately, but there should be a clear pathway toward workforce growth. We also give preference to companies operating in the governor's identified priority sectors, including fintech, biopharmaceutical manufacturing, agriculture, blue tech, tourism, recreation, and entertainment. That said, strong companies outside these sectors are still encouraged to apply. Alignment is a preference, not a requirement. And finally, track record matters. If you have demonstrated traction, prior growth, customer validation, or an experienced managed team with execution history that significantly strengthens your application. We are investing in both strong ideas and strong operators. We're going to talk now a little bit about how the early stage venture capital program works. This slide highlights the main goals of DESVC. The program is specifically designed to support early stage venture capital investment in Delaware. Instead of investing directly in individual startups, the state will use SSBCI funds to finance venture capital firms that are managed by Delaware-based teams. These VC funds then become the vehicle through which companies receive investment, leveraging the expertise of professional investors who know how to identify high potential startups and provide them with guidance as well as capital. The program is structured to support multiple VC funds, not just one, which allows for more diversity in investment strategies and opportunities. We are also focused on encouraging funds with diverse management teams and a specific focus on underserved founders. This approach not only expands funding options for Delaware startups, but also strengthens inclusivity in the entrepreneurial ecosystem. Overall, DESVC is intended to enhance Delaware's entrepreneurial ecosystem by boosting early-stage investment capacity. By funding professional venture capital managers who then invest in startups, the state can efficiently increase the total pool of capital available for growing companies, help promising ventures reach their next stage of growth, and ultimately foster innovation and job creation across Delaware. This program represents a new layer in our SSBCI portfolio, complementing our accelerator program and other initiatives. This slide focuses on how companies benefit from DESVC. First, access to early stage capital through professional VC funds, VC fund expertise and support, leveraging SSBCI funding to attract additional private investment. There are opportunities for diverse and underserved co-founders and to support growth and scalability. A key focus of the program is supporting diverse and underserved founders, helping ensure that more entrepreneurs have access to venture capital. Ultimately, this initiative is designed to support growth and scalability, preparing companies for follow-on rounds and helping them become successful, sustainable businesses in Delaware's economy. This is just a little bit of an overview of the VC program. We will be spending the bulk of the webinar going over the Accelerator and Seed program, as the VC program is not ready to launch yet and will require us to post an RFP in order to secure the partnership with VC firms. There will be more details to come about this program. Now we're going to move on to the Delaware Accelerator and Seed Capital Program, or DASCP. This program provides direct equity investments to early-stage, high-growth startups in Delaware. Again, this is not a grant program. The state invests in companies in exchange for equity. A core requirement of this program is the one-to-one private investor match. For every dollar of state funding requested, the company must secure a dollar in private capital. This match not only ensures investor validation, but also leverages state funding to attract additional private capital, effectively doubling the resources available to help the company grow. For this tranche, the minimum state investment is $250,000, which means a company must have at least a $250,000 private match to qualify. The typical investment for this round of funding will range from $250,000 to $600,000, with a maximum allowable investment of $1 million, although most investments will be well below that cap. Final investments amount are determined based on the company's stage of growth, capital needs, and the strength of the private investor match. This program is designed to support scalable businesses with strong growth potential, helping them attract additional investment, expand operations, and create jobs in Delaware. Let's look at the match requirements. A qualified lead investor is a required part of the program. This is someone who is committed and brings real private capital into the financing round. This ensures credibility and demonstrates market validation for your company. Importantly, all documentation signed with the state must match the terms set by the lead investor to ensure alignment and avoid conflicts. The program requires a one-to-one private match, meaning for every dollar of state funding, the company must secure a dollar in private capital. This not only meets program requirements, but also leverages state funds, effectively doubling the total capital available for your startup. The match attracts additional private investment and signals to other investors that the company has validated support from experienced backers. Timing is a critical factor. Investments do not count as a match until you have received a letter of obligation. This letter is how we show leverage. Once issued, the letter provides a window of about 6 months to complete the private funding and finalize the state investment. Overall, the lead investor and one-to-one match are not just program requirements. They are tools to leverage state funding, attract more private capital, and demonstrate credibility to future investors. Let's talk about how the funds can be used. These investments are designed to support legitimate business growth. Funds can be used for common business expenses such as startup costs, working capital, equipment purchases, inventory, franchise fees, and the acquisition of tangible or intangible assets, with the exception of goodwill. In short, if the expense directly supports growth and operation of your business, it is likely an allowable use. However, there are clear restrictions. Funds cannot be used for passive real estate investments, purchasing securities, lobbying activities, or paying income, payroll, or sales taxes. They can also not be used to reimburse owners for prior expenses or to buy out ownership interests in the business. The key principle is this: funds must directly support business growth, not personal benefit, passive investment, or financial restructuring. On this slide, you can see how the funding works for the Delaware Accelerator and Seed Capital Program. The funding range is $250,000 to $1 million per company, depending on stage, traction, and capital needs. Not all applications will be funded. As a reminder, the majority of investments will be well under the $1 million cap. The funding can be structured as a safe, convertible note or equity investment with flexible terms designed to support early-stage growth. Importantly, the program's funding structure depends on the lead investor structure. As part of the program requirements, we align our terms to match the lead investor, ensuring all investors are on the same page. Another important point is that the state funds from SSBCI cannot exceed the amount that your lead investor contributes. The program funding is designed to leverage private investments, so you have both public and private capital supporting your growth, and your deal terms remain consistent. Because this program is funded through the SSBCI initiative, there are certain federal reporting and compliance requirements attached to this capital. We document these requirements through a side letter. This letter is a supplemental agreement that sits alongside the other investment documents. It outlines specific program requirements tied to SSBCI funding. This may include expectations for follow-up reporting or providing certain information after the investment is made. These requirements allow the state to meet federal reporting requirements and track the impact of the program. Once your application review process begins, notifications of approval typically occur within 4 to 6 weeks. If your application receives funding, it can sometimes take up to 3 additional weeks for the funding to be deposited into your account after all the documentation is signed. This is because the funds need to go through all of the state systems, which can sometimes be slower than expected. When you apply to the Delaware Accelerator and Seed Capital Program, here's what you can expect. First, you'll submit your application via the online portal. Then, we'll perform an initial eligibility review, including compliance checks, to make sure your company meets the basic program requirements. If your application passes that stage, it moves to the due diligence phase, which is conducted by our third-party consultant, David Sharp with Urban Advisors. David has been working with us since the inception of the program. He brings deep expertise in equity investing and extensive experience working with the U.S. Department of Treasury, making him an invaluable resource throughout the due diligence process. Next, your application goes through evaluation and the investment committee. If approved, this is the point where you will receive a letter of obligation, which outlines the terms of the state's investment. Importantly, this letter can also serve as a tool to help your company secure the required private capital match. Once the match is in place, you will execute all the paperwork for the state's investment, ensuring that all documentation aligns with your lead investor's terms. Finally, after everything is complete, your company receives funding from the state. This process ensures that the state investment is carefully matched with private capital, properly documented, and aligned with the company's growth plan, while providing tools like the letter of obligation and guidance from our expert consultant to help companies meet their private match requirements. Once you're ready to submit your application, you'll need to prepare several key documents. Having these ready will make the process smoother and faster. Here's what we typically require: an executive summary, which is a brief overview of your company, your mission, and your growth opportunity; a fully completed application with all the fields filled out accurately in our online portal; a pitch deck, which is a clear, concise overview of your business, your team, and your growth strategy; financial projections, which are typically 3 to 5 years of projected revenue, expenses, and cash flow; year-to-date financial statements, including an income statement and balance sheet; ownership and board of director bios so that we understand who is running and advising your company; a cap table, which is a snapshot of your current ownership structure; the 3 most recent years of tax returns. This is if applicable. If your company is newer than 3 years, you could just send us the tax returns that you have. And a source and use form showing where the funding is coming from and how you plan to deploy it. We also require a Delaware business license and a certificate of good standing. Having all of these documents ready in advance will help the process move smoothly and avoid delays once your application is under review. Strong applications are clear, specific, and growth-oriented. First, we look for a well-defined business model and revenue strategy. We need to understand exactly how your company makes money, not just the vision, but the mechanics. Your application should clearly articulate the problem you're solving and why your solution is differentiated in the market. Specificity matters. If you already have a lead investor identified, that should be clearly documented. Scalable growth potential is key. We are investing in businesses that can grow beyond incremental gains, businesses with the potential for meaningful expansion. You should also define your target market clearly. Who is your ideal customer? How large is that market? And how will you reach them? Competitive differentiation is another major factor. Why will customers choose you over the alternatives? We also assess leadership capability. Does the team have the experience and the skill set to execute the growth plan? Your financial projections must be realistic and supported by assumptions. Overly aggressive or unsupported numbers can weaken an otherwise strong application. And finally, your use of funds should be specific and strategic. We want to see exactly how this investment will accelerate growth. Before you submit your application, it's helpful to know some of the most common mistakes that can slow down or even prevent approval. Avoiding these will help improve your chances and make the review process smoother. Here are some key areas to watch. Incomplete financial projections. Make sure your projections include revenue, expenses, and cash flow for the next 3 to 5 years. No clear use of funds. It's important that you clearly show how you plan to use the funding and tie it to your growth plan. Unrealistic revenue growth. Be ambitious, but keep your assumptions grounded in reality. Overly optimistic numbers can raise red flags. Missing documentation. Double check that you've included everything from executive summaries to financial statements, licenses, and certificates. And vague market explanation. Make sure you clearly define your target market, the problem you're solving, and why your solution matters. Keeping these points in mind will help your application stand out, speed up the review process, and reduce back and forth with our team. Here are the key points to remember when it comes to DASCP. The program provides direct investment in early stage, high growth startups, but it is not a grant. The state receives a portion of the company in exchange for funding. A lead investor and one-to-one private match are required, which helps leverage state dollars and attract additional private capital. Investments typically range from $250,000 to $600,000, with a maximum of $1 million, and the letter of obligation can help companies secure a private match. Throughout the process, companies receive guidance from David Sharp with Urban Advisors, who has been with the program since the beginning. Overall, the goal of the program is to help startups grow, attract further investment, and create jobs in Delaware. And just another reminder that the programs are currently on pause, but we will make an announcement once we begin processing applications again. To close, Delaware's SSBCI equity programs are about more than just providing capital. They are about supporting small businesses, fueling innovation, and driving economic development across the state. Through the Accelerator and Seed Capital program, the state provides direct investments to early stage startups along private investors, while the early stage venture capital program leverages state funds to invest in Delaware-based VC funds, which then deploy capital to startups. Both programs are designed to maximize the impact of state funding by leveraging private capital, ensuring startups get not only money, but also guidance, mentorship, and strategic support from professional investors. A central goal is inclusive entrepreneurship, prioritizing diverse founders and underserved communities so that all Delaware businesses have a chance to grow. Delaware works hand in hand with entrepreneurs, investors, and local partners to create a supportive ecosystem that fosters innovation, helps startups scale, attracts follow-on investment, and ultimately creates jobs and strengthens the state economy. These programs are tools for long-term economic growth, helping the state remain competitive and ensuring that Delaware companies have the resources they need to succeed now and in the future. Again, my name is Joanna Colson. I'm the SSBCI Program Manager. We're going to be answering some general questions about the accelerator program now, but you can also feel free to email me with specific questions anytime. Thank you for your time today, and we'll open it up to questions.
All right, thank you, Joanna. For everyone on the call, again, you can place your questions into the Q&A box. We will be answering broad questions, general questions. If you have something specific to an individual case, to your specific situation, we encourage you to email Joanna directly for that. So not only do we have Joanna here, but we also have Jory Moore, who is our Director of Business Finance, and she may be answering questions as well. And with that, let's take the first one, which is, can these funds be used to launch new products or business lines in an existing business rather than an entirely new business?
That's something I would probably need to have more details on, and you can definitely feel free to email me and we can talk about the details and figure out if this program would work for you.
Thank you. The next question, can DASCP and DESVC investments be made to LLC companies?
Yes, they can.
Does the lead investor have to be in Delaware?
That is not a requirement.
When will this program resume again?
Unfortunately, we don't have an exact timeline for that, but we're working really hard to get the second tranche of funding distributed to us. So we're hoping within the next few weeks.
Great, next few weeks. Can people still apply even though the applications won't be processed?
They can, yes. The application portal is open.
Can investments be used to receive federal matching grant funds?
We do not accept grant funds as a match, if that's what you're asking. The match has to be from an investor.
And usually, just as a side note, usually SSBCI cannot be joined with any other federal programs. So SBA, all those things it can't be combined with other federal programs.
Thank you, Jory. I think that was part of what they might have been looking for. Are nonprofits eligible?
No, nonprofits are not eligible for this program.
Thank you. Should we reach out to Joanna for all information regarding the loan programs?
You can definitely email me about the loan programs.
All right, this question is asking for some clarification. Which program is best for a startup business? And that they're asking if you can also take into consideration the two loan programs.
I'll take that one. So for you, what I would do is email either Joanna or myself and describe your specific situation. Depending on what your need is, would depend on what program we would use. And the size of the amount of money that you need. Now, we have two loan programs, one for smaller dollar loans we tend to lean towards, and for larger dollar loans. Same thing with the investments. It's usually larger dollar, but it depends on what your need is. So I would definitely reach out to either Joanna or myself, and then which my email address is now in the chat, and then let me kind of meet with you and talk to you about what you need.
Thank you, JJ. How long is the approval period again?
Once we get to the application and start reviewing it, it typically takes 4 to 6 weeks.
Good question here. Does the state take an equity position in the business receiving the funds? Is there any type of repayment requirement?
It's not a repayment, it is an equity position. So we would take our terms match the lead investor's terms. So it's it's pretty flexible with whatever your lead investor, the way they're investing is the same way we will invest.
For business decisions, who will have voting rights from the state? And how does the bureaucracy work on the state level for business decision-making?
So for that, it is a requirement, and this is in our, and we won't get into details on the side letter because we'll go over that on an individual basis. But it's a requirement that I am a part of your board. Now, I don't have to have voting rights as far as financial decisions and business decisions, but I do have to either attend board meetings or investor meetings to let me know how the company is doing. And we do require regular updates on financials and how the progress is going with the business.
Great. Okay. Can the investors be the owners themselves?
For that one, please email me because we can discuss that one. That's on a case-by-case basis.
Where can we send the application, even if it's on pause?
It can still be sent to our portal,
Which is?
JJ, can you take that one for me? I'm sorry.
Yeah, so if you go
Thank
to our
you.
regular website, it's delaware.business.gov, and you go to the About Us and you click on Division of Small Business Portal. Within that screen, you're going to see a blue button that says Services and Payment Portal. Once you click there, and the right-hand side is a login button. If you already have a login with us, meaning you already applied for another loan or grant, you will use your existing email address and password. If you do not have a login with us, then you will be, once you hit that login button, there will be a button for you to create an account. And then once you create an account and you log in, there will be a tile for the Accelerator C program. You click on that and then you can apply. If you need somebody to help you walk you through that process or getting to the portal, just let us know.
All right. And I put our main website address in the chat along with the SSBCI URL. Okay, next question. Can funds from a non-government program be used?
No, they cannot. It has to be an investment.
Based on last year, what percentage of applicants generally got the Seed Accelerator funds?
That's kind of, I don't know exactly. I would guess maybe about 80% because we have such a long pipeline that unfortunately we weren't able to get through all of the applications in the first tranche. So we'll be working on those through the second tranche as well.
Let's see. What if I do not have an investor? It says, what loan can I apply for a startup? Again, we encourage you, any questions about the loan program at this stage, please email joanna.colson@delaware.gov. It's right up there on the screen. Since we're trying to focus this primarily on the equity programs. Will there be a buyout option from the state? If so, how many years prior to purchasing the state stake on the startup company?
There won't, I don't believe there will be a buyout option from the state, no.
Okay. Is there a minimum or maximum percent of equity that DSV would like to have?
Again, that's all dependent on the lead investor. There's no minimum or maximum that we require.
And is there a required length of time that the state will be involved with the business?
I would say at least a minimum of 5 years. You are required to stay in the state of Delaware, and this is across the board with all our programs for at least 5 years. So we would be involved at least at a minimum of 5 years, depending on how your company goes.
All righty. That's the end of the questions that I have in the box right now. If anybody would like to add questions, please drop them in. We'll give you another few seconds to type them. Okay. Seeing none, this concludes our webinar for today. Thank you to everyone for attending. Oh, wait, we have one more. Oh, it's another loan question. Please email Joanna at joanna.colson@delaware.gov. So thank you everyone for your time today. We will place this recording on de.gov/SSBCI by noon tomorrow. And you all have a great rest of your day. Thank you.
Thank you.